Hello guys, welcome to the Train Parrot. Have you ever used a DCA bot that has so many safety orders that they cover a wide range to the downside? And then after running that bot for a very long time and looking at the statistics of how many times those safety orders are being used, have you ever ended up scratching your head and thinking, are they really worth all these safety orders? What if I was using less safety orders? Or even worse, what if the price exits from the lower safety order and it never comes back into the range, leaving you holding a massive red bag that definitely cannot pay for all the smaller profits that you took by using just the top safety orders? I had that question very often. And in fact, in some circumstances, I decide to put more safety orders than the ones that I'm going to need just for the sake of gathering statistical data that shows me how many times my strategy is really requiring those safety orders. In today's video, I'm going to show you a technique that is very simple, that is only going to require you to have a spreadsheet and the information of how many times your strategy was using each of the safety orders. And based on that information, you'll be able to estimate what will be your profits if instead of using all those safety orders, you position a stop loss anywhere in this range. We're going to find out where is the sweet spot to put a stop loss somewhere in the middle of this whole range to completely outperform the bot that is using all the safety orders, while at the same time reducing dramatically the risk of running a bot with such an enormous amount of safety orders. Guys, if this is the content that you like to watch, make sure that you're subscribed to the channel, hit the notification bell so every time I publish one video you get notified. The main focus of this channel is about trading bots, strategies, buying scripts, but I also cover some technical analysis as well. If you like the video, consider hitting the like, and the two best things that you can do for this channel is to watch the full video until the end and leaving a comment down below. Thank you so much for that. Now, in today's video, we're going to look at the statistics of an actual bot that I've been running for 2 months. And this is a real example that I decided to move away from these 5 safety orders into a bot that is going to have a stop loss somewhere in between 1 to 5. And I'll show you the whole process of deciding that just using a few formulas in a spreadsheet. I'll make sure that you can see everything, how I'm doing it step by step. This bot made me 15% in just above a month of running it. But after the tweaks I'm going to make to the bot, in that same period, I will have made 36%. I'm going to tweak the bot to use less safety orders. What is the first thing that you need to do if you have a bot that you've been running for a long time? It's got a lot of safety orders. Well, you have 2 options. You can go to the deal history on 3 commas and go one by one all the deals, or you can use the export button here and import it into a spreadsheet and then capture all the field orders. That is the best option for sure. If you're using WickHunter, that's also pretty straightforward. There's an export button that you can find at the bottom of the P&L reporting when you select one of the bots. Once you have all the data in a spreadsheet, in this case I'm using Google Sheets, you can go to data and insert filter. Once you insert the filter, you're going to be able to select here how many of them are 1 safety order, 2 safety order, or 3 safety orders. For example, here I'm going to select all the ones that have 4 safety orders. And by doing that, I know that 4 times, if I select count here, the 4th safety order has been used. Following a similar approach, you can do the same and repeat for 0, 1, 2, 3, 4, 5. Obviously, that depends on how many safety orders your bot was set up to use. After you do that, you're going to end up with a table like this. This is the base order safety order. 0 means that it's the base order, so it managed to close just by using the base order. We know that 160 times we managed to close just with the first base order. Notice that this particular setup looks amazing to remove some safety orders, just because with the base order and the first safety order, you're already closing 233 deals. And the total number of deals is 273. So only 40 deals are actually using from the 2nd to the 5th safety order. Not to mention that the 5th has never been used. So this looks like a really great setup to do this particular analysis. If you find that the distribution of the frequency of each of the safety orders, let's say for example this was 30, 40, 50, 60, is quite balanced, and the actual lower safety orders look like they are in fact needed, then maybe this analysis is not for that bot. This analysis is for bots that, for example, use a very good quality deal start condition, and you're noticing that very rarely you are needing the lower safety orders. If that's the case for your strategy, you're looking at the right analysis. Now, before we get into all the spreadsheet and then concluding what works best for that bot and how to multiply more than twice the profits of the same bot, let's look at the basic using a 3 commas DCA bot. We have a base order of $100. We have a safety order of $200. The deviation of this particular bot of 5. We have 5 safety orders, and the volume grows 2.2 with every single safety order. The step scale is 2. In order to understand how this affects the volume across all the range of safety orders, we're going to click on table. This is going to clear a lot of questions. Where is all the volume? So we know that for the base order, we are using only $100. And for the first safety order, we are doubling. That's 200. And now we're going to start using the volume scale. So the volume scale was 2.2 and it's multiplying 2.2 by 200 is giving us 440. So this is the size of each of the orders. But you have to understand that if we have filled, for example, 3 safety orders, the total volume that has been already deployed in that particular deal is the total of adding 968 plus all the higher orders. So it's 968 plus 440 plus 200 plus 100. If you dismiss the table, you're going to notice here this number. This number is telling you what will be the max amount that the bot will use if you use all the safety orders. If you want a calculation of how much volume you're going to use if you just use the 4th safety order or the 3rd, it's very easy. All you have to do is remove safety orders from here and you're going to get the calculation right there automatically without needing to do anything. Like for example, this is for 3 safety order, for 4 and for 5. That's the total volume used. We can also see here what is the deviation based on the bot settings. Like obviously, if you don't use any safety order, the deviation is 0. The first one is located at 0.5, then you're adding 1, then you're adding 2, and so on. The max cover deviation of this bot is 15.5. These deviations here are wrong. This was 1.5, 3.5, 7.5, and 15.5. Okay, we have now corrected the deviation, we have the frequency, and we have the number of safety orders. Now we are going to do an exercise. What if we use just 3 safety orders and we locate the stop loss right at the location of the 4th safety order? I'm not going to try with 5 because 5 was never reached. So I want to know if I put the stop loss right at the position of the last safety order that was ever used. So that means we're going to use 3 safety orders, and at the location of the 4th, there will be the stop loss. Something I forgot to tell you is that the take profit of this bot is 0.58. So on the first row, we have what is the total profits that we make just from closing deals using the base order. So that will be 0 here, 0.58 take profit. The volume of the base order is $100. 160 times this thing happens. Therefore, we get a P&L of $92.8. The way this is calculated is very simple. You multiply just the take profit by the volume divided by 100 because it's a percentage, and you multiply by the frequency, and that gives you the 92.8. Now the volume here, I'm going to show you the formula, is very simple as well. The formula is basically we are taking the volume of the previous safety order, and to that we are adding the volume of the new safety order, but multiply by the power of 2.2, which is the volume scale, elevated to the index of the safety order. In this case, this is the first safety order, and we deduct 1, so we get here 0 the first time. So this is 2.2 power 0. That is going to give you just the number 1. So this whole thing here turns into 1, multiplied by this, and it gives you 127. On the second safety order, we're going to multiply by 2.2 for the first time because the index of the safety order is 2, 2 minus 1 is 1, so we multiply by 2.2. And in this case, it's 3, so we are gonna do 200 multiplied by 2.2 and again multiply by 2.2. So it's gonna be twice, and that's gonna give us only 49 P&L. This is because this time the frequency of deals that they close with this amount of volume were only 5. That's why it's barely making $49. The fourth safety order is located at 7.5 deviation as we saw before, and we are now putting a stop loss right there. That means that 4 times, which is the sum of 4 plus 0, 4 times, we're going to hit the stop loss of minus 7.5. And that is because instead of having a safety order like we used to in the original bot, now we have a stop loss there. And because of that, we're going to have to lose 4 times 7.45% of the total volume that we manage to enter into the market up to the third safety order. So third safety order got filled, and then the price carry on going down from 3.5% to 7.5%. And at 7.5%, you took the loss 4 times. And that gives you minus 512.4. Overall, this, if we sum it all, is giving us minus 241. So the total amount of volume that this bot is using is 17.8 in total. So since we are only using now 3 safety order, that is 1708, which coincides with our number here. That means that we are losing $109. And if we divide this by the volume used, which is 1708, we end up losing around 6%. Placing the stop loss right at the location of the last used safety order in this particular setup is not a great idea. And I'm gonna give you a hint, but most of the times when you know that the bot is going to reach certain safety order, just replacing it at the same location for a stop loss is usually a bad idea. We need much more information than that to decide where to locate the stop loss to actually increase the profits. Alright, let's move on. 3 safety orders is not the answer. What happens if instead of using 3 safety orders, we only use 1? And why am I pointing to 1? Because when you use up to 1, you cover 233 deals. And that is very close to 273 total deals. So I have a feeling that we might improve this minus 6% in this particular alternative. So when we use 1 safety order, we definitely are making an improvement because this is giving me around 13.27% for the same period. I'm saying 160 deals closed with a volume of 100. They gave me 92.8 profit. Then 73 deals closed at profit, again at a profit of 0.58, and that gave me $127. And then the second safety order, which is located at 1.5, caused 40 losses. This 40 is coming from the sum of all these instances. So all the times that you hit with 2 safety orders, with 3 and with 4 and with 5. In total, that gives you 40, and that's the total frequency that you're gonna hit 1.5. And you're gonna hit it with a volume of 300 because the last safety order field costs you to buy in total $300. So these stop losses are gonna cost you $180 in losses, and you're gonna end up for this particular bot making 13% profit around. Since this bot is already way above the 15%, I will say that in some way this is a step back because it's taking partially some of the profits, but at the same time, with a bot like this, I might be able to sleep better because instead of placing safety orders all the way to 15% and having a stop loss located at 30% and hoping for the best, because the day that you hit that 30% is going to take the profits probably of 2 or 3 months of hard-earned work. Instead, this approach may have some months that you make more, some months that you make less, but overall, you should not get such a big loss in one single deal. All right, the third and last approach that I'm going to look is the one where I'm using just the base order to trade. I'm going to locate the stop loss right where the first safety order is. Let me know in the comments if you can guess if it's going to be better or worst. Guys, I'm gonna leave a link in the description to this exclusive event that you can unlock up to 60,000 in rewards if you open an account in OKX, and when you're signing up, you make sure that you write down here Parrot. You have to expand the referral code. That's gonna guarantee that you get for a lifetime 20% discount in trading fees. And then using that new account on OKX, use the link in the description that says exclusive event OKX and click join. Follow the instructions. You have 12 days to register and claim the rewards. In the third example, we are not using any safety order, and basically we are taking the total frequency of trades that went to 0.5% or below, and that's giving us a sum of 113. So we know already that 160 deals are closing in profit with a take profit of 0.58, and now we know that 113 are going to close at a loss of minus 0.5. Thanks to the win ratio of this particular strategy and a very high frequency of closing deals not needing a safety order, it makes it a really good candidate to turn it into a strategy that just has a take profit and a stop loss. At least when we analyze the data that came from the past 1.5 months trading, you definitely can argue that it's not enough data to guarantee that this sort of profits are going to be sustainable. In this case, we are seeing 36.3% profits. That's way above the 15 that I managed to get when I was using the safety orders. It's better than using a single safety order, and it's definitely better than placing your stop loss at the last use safety order. A last thing that I want to say, if you're running a bot like this that has so many safety orders, it gives an illusion of safety because you're covering 99.9% of the situations in the market. Pretty much all the time you will be able to close your deals until there's the day of the lottery, and that day the price will fall outside the range and you're going to have trouble to exit at profit, leaving you potentially with a red bag. Or what's even worse, some people end up adding even more safety orders, getting themselves in even a worse situation. Guys, it will be amazing if someone was able to build a spreadsheet that you can input just the data about the bot. I'm talking about the safety order, the frequency of each order being used, the deviation, the volume, all the things about the bot. It will be really great if it was able to calculate these numbers. So basically, what will happen if the stop loss was in each individual safety order automatically? It will tell me you will do -6 with 3, you will do -3 with 2, with 1 you will make this, with 0 you will make that. Some sort of statistic analysis tool that takes the past performance based on this, plus the definition of the bot, and it will somehow recommend you what will be best for your bot going forward, obviously based in the past performance, which is not an indicative of the future performance, but definitely something worth every now and then health checking your bot and deciding whether the large number of safety order is still the best idea. Guys, if you enjoyed this video, you know what's the drill. Hit the like, subscribe to the channel, hit the notification bell, and do not go anywhere without leaving a comment down below. Thank you so much for watching. I'll see you on the next one. Bye bye.